Your client calls you. They're in a panic. They need $50,000 by Friday to make payroll. And you know exactly what to do because you've seen the ads for overnight cash, or you have relationships with factoring companies that can buy the receivables, or you could say discount your receivables and get your clients to pay you today. Problem solved, right? Well, not exactly. Wrong. Problem solved temporarily. What most articles about cash flow will not tell you is that the most of the strategies that save your client today might destroy their business tomorrow. And if you don't understand the difference between short-term rescue strategies and long-term wealth building cash flow strategies, then you're not providing advisory, you're providing band-aids and or guesswork. Let me give you a real example. I worked with a company generating $3 million in revenue each year. They were using merchant cash advances to solve their cash flow problems. The effective annual rate on an MCA loan was started at 60%, and I've seen them at 80% and 90%. And the solution was costing them a couple of $100,000 a year in financing, which was wiping out their profit and their cash flow. So stay with me until the end. I'm going to give you a specific action you can take this week to help your clients distinguish between rescue strategies and long-term business building strategies, making you the confident cash flow advisor they so desperately want and need. I'm David Saphir. I am the founder of Cash is Clear Learning Systems, and this is Cash Flow Confidence Live, where finance pros come to learn how to become a fearless cash flow and profit advisor. For over 20 years, I've been helping accountants, CFOs, financial professionals master cash flow advisory, and I've worked with businesses generating from $1 million in revenue to an excess of $20 million. And I've worked with businesses all over the globe, more than 40 countries. Why does that make a difference? Because what I'm about to teach you are universal truths, no matter where you live. And my mission is simple: to help you close the gap between your current knowledge and the clarity that you can provide to your clients today and what you can gain to transform your clients from crisis to profitability, or from marginal to constantly having cash in the bank. Let's dive into today's topic. The fundamental truth about cash flow strategies is something they won't teach you in school, and they won't teach you in the press, the popular press. But not all cash flow strategies are created equal, because too many strategies that are, say, improve your cash flow strategy, cash flow today using these 10 techniques, are also reducing your long-term cash flow and profit. Think about that for a second. A strategy appears to work. Your client gets the cash they desperately need, but it's actually making their situation worse over time. And some of them make their situation work immediately, not work, worse. I'm going to repeat that. Strategies can appear to work short term. Your clients get the cash they need, but it's actually making their situation worse over time. And it could be making their situation worse immediately. That's the clarity gap. Your clients cannot see it. And frankly, most advisors don't see it. Certainly the people who write the articles in the Wall Street Journal or in Forbes or you name it, I've seen them in the best business magazines, quote unquote. But when it comes to cash flow, they are selling short-term solutions. Once you understand this principle, you will never look at cash flow advice the same way. There are 3 categories of cash flow strategies, and I'm going to break it down. Category 1, they're pure wealth builders. Category number 2, necessary rescue strategies. And category number 3, the trap. I'll get to the trap last. Let's go back and give you some examples. Category number 1 for cash flow strategies, they build wealth. They build the business, period. They increase both short-term and long-term cash flow and profit. An example of this is focus on high margin products. When you go and help a client identify their highest margin and profitable offerings, so then they can turn around and focus their sales efforts on those products, they get more cash today and tomorrow and forever. It's permanent. There's no trade-off. Short-term versus cash flow versus long-term. Permanent fix. Now let's talk about category number 2. I'll give you an example for the necessary rescue type strategy. Those are the strategies that solve the immediate cash problem, but reduce long-term cash and profit. They're not inherently bad, but they're emergency tools that you don't want to use if you do not have an emergency. The problem is when emergency tools become standard operating procedure. And the example I will give you is calling up and giving your clients, or your clients give their clients discounts on paying receivables today. 5%, 10% discounts. Yep, you can get the money in the bank today. And I've recommended this strategy. However, if your client has 20% gross, well, let's call it 40% gross margins, and they discount 10%, they have given away 25% of the gross margin on that particular deal. And if they have 5% net margins, they have lost money on that deal. It is unsustainable. Let's go to category number 3 of cash flow strategy traps. Well, bad cash flow strategies. Sorry. Let's go to category number 3. Those are the traps. These are the strategies that people think are solving problems, but they're actually creating bigger problems, and sometimes like big immediate problems as soon as you put it into play. These are the ones you need to be aware of and recognize to help your clients avoid. So let me give you some more real examples, and I'll give you on that last one, the trap. But when the rescue becomes the problem, that you say, okay, we'll keep going. Factoring receivables, for example, you get 70 to 90% of your money immediately when there's an invoice, and it solves today's cash problem, but they're paying 2% of the invoice value for that speed, and it messes with the client relationship. And you do that away, and you're giving away 2 to 5% permanently. And oftentimes with factoring, you can't pick and choose. It's a permanent solution. It's one size fits all. You've got to do it with all your receivables. Even worse than the 2 to 5% of your revenue is you could be killing your margins. I've already mentioned that. The bottom line, you could be killing all of your net profit. I worked for a company, public company, that we were factoring And I was friends with the controller, and he took me to his side one day and said, David, I'm not sure what we're going to do. We are using factoring. That's where I was introduced to the concept. And it is costing us so much that we almost lose money on every single shipment we make. You get the cash in the door today, but long term, it's killing your profit and your long term cash flow. Let's talk about the aggressive discounting of your accounts receivable, that 10% off of pay me today and I'll give you a 10% reduction. You owe me $10,000, pay me $9,000, we'll call it even. Yeah, it works. And I have recommended it to a company that was in real trouble. But the first thing they did was just call and make phone calls. And some of the people said, oh, sorry, I can just pay you today. But it works. But you just gave away a chunk of margin, 25, 50% of your margin. And if you run on those margins, again, you're giving away all of your long-term profit. So then let's talk the opposite. Instead of getting money in, sending money out. Here's another example of something that's called, hey, here's how to fix your cash flow problem. Just don't pay your suppliers. Great. 2 thumbs up. I bet you'd be happy being on the other side of that. And it works okay short term, some of the time, especially if you communicate. But here's the key. They get upset. If you're robbing Peter to pay Paul, Peter's going to get ticked off. And they could cancel your contract. They could put restrictions on. It doesn't work long term. And guess what happens if we have another crisis? The global pandemic that was COVID, one of the things people learned, if they weren't paying their vendors on time, if they were a problem client, they got cut. When there were supply shortages, they didn't get treated as well as the people who paid on a regular basis, who didn't have problems and that weren't as a problem client. So it's a short-term strategy. And you need to take the next step, which is finding the root cause problem that's creating the issue. Now, here's the biggie that I want to make sure you know about. Those destructive strategies. There's one in particular. It's called an MCA loan. And I'm going to give you that example right now. It's a company killer. Category 3 MCA loans, they're company killers. They're also known as merchant cash advances, and they go by other names. A lot of times they won't call them that. But by definition, there's 2 things. Number 1, they pull money from your bank account every single week. Number 2, they have no interest, but there's a ton of charges, which effectively you're paying between 60 and 90% effective annual interest. An MCA loan for $50,000 can cost $30,000 or more in fees. That's $30,000 that won't be profit, but it gets worse than that. The money that's pulled automatically from the bank account every week creates a problem in every case that I've seen it. For a $50,000 loan with a 6-month payback, that's $1,923 per week for 26 weeks. And that's for a deposit of $20,000 that's gone the next day to pay an emergency expense. Generally, you create a bigger problem than is solved with another MCA loan. And the company starts to literally go into a death spiral until finally they can't get another MCA loan. And that's what makes this strategy so dangerous. And the other reason it's so dangerous is because it works. You and your clients could go get MCA loans today and have $50,000, $100,000 in your bank account tomorrow for a week till you spend it. And then that big vacuum sound starts coming out of your bank account. All right. Here's an interesting little statistic. I have 233 cash flow strategies that I've documented that I teach. And there's only one strategy that says do not use MCA loans. That's the only one that's a do not do. Please be forewarned. Okay. So let's have an advisory conversation with a client and make you indispensable. When a client asks you about factoring or an MCA loan or heavy discounting, most advisors just explain how it works. This is the mechanics, and this is the numbers. But the confident cash flow for advisors, it's a different conversation. Yes, this strategy will solve your immediate problem. Here's exactly what it will cost in fees and lost profit, emphasizing that. More importantly, let's identify what caused it in the first place to have this cash flow shortage and create a plan so you never need to use this again. That's advisory. That's consulting. It's focusing on long-term solutions, not just on fixing a temporary problem. It's also talking about cash, not about their accounting. But there's more. One of the things that I teach in the Cash is Clear advisory program is that the numbers are symptoms. The real problems are human. Why does a company need short-term cash flow strategies that create long-term cash flow declines? Why? There's human factor reasons, and here are some. They lack clarity about the real cash position. Here's the human factor involved. No one's managing the cash flow forecast. They have a poor collection system. Again, human factor is no one has authority or incentive to collect the cash. They're pricing wrong. The human factor there is, well, it could be they're afraid of raising prices or they don't understand their margins. But when you address the human factors and not just the numbers, you eliminate the root cause reason for needing expensive rescue strategies. And it's when you address those strategies, and instead of only addressing the strategies with expensive solutions, if you do more than that, then you don't create the downward spiral. If all you use is expensive upfront solutions that don't have any escape hatch, you start creating the downward spiral. And I know you don't want to do that. So let me give you an offer. If you want to understand more about some strategies that you can recommend, strategies that increase both long-term as well as short-term cash flow without the dangerous trade-offs, I've created a free resource for you. These are resources and strategies that you use with healthy clients. Healthy meaning that there's no issues with them. They don't have problems. You can get them healthier. Download the ebook. It's at CIC60.com. It's 24 strategies, 24, and they're all strategies that I've used, I've implemented, and there's probably some that you've never heard of before. Probably quite a few. So the link is in the show notes. Please use it. Let me know what you think. And those 24 strategies are just the beginning. I teach over 230 when we're recording this. It's 233. Yesterday morning, it was 232. We identified one during a mastermind. So, but 24 is a great start. Get the ebook. So one action item for this week, review with your client list and identify any client who is currently using or considering one of those rescue strategies. I've only mentioned a few, but there's so many of them. Anything that's costing them a decrease in revenue would be a rescue strategy. And well, another one would be very expensive credit, high credit card balances. That would be another, something that's expensive, that's costing them money. That way, revenue decline, high interest. Those are two key things to look for. Then schedule a conversation with them. Don't criticize the decision. Simply ask two questions. Number one, what problem are you trying to solve when you started using this strategy? So, what's going on that your credit card debt is increasing every month? Or what's going on that you are discounting your receivables? Why did you have to start doing that? Is something changed? And then number two is, what would it take to solve that underlying problem so you don't need to do this expensive solution anymore? Now, they might know, but they might not. Either way, this positions you as an advisor, not as an accountant, not as just a fractional CFO that does reporting or a bookkeeper. They shift the conversation from tactics to strategies, and they open the door for you to provide real advisory value. And that's what clients pay premium retainers for. That's how you close the gap between accounting and this cash world that they so desperately need help with. That's how you become indispensable. Now, I'm recording this live and my monitor just shut off. So I've got to get my monitor back on. And there we go. Sorry about that. So if you're interested in this topic, Pivot, it's a 4-day cash flow conference where we're jamming 16 weeks of teaching in a boot camp style case study that you can learn quickly. Now, when I say boot camp, I don't mean that we're going to be yelling. I'm talking about it's fast, furious, but you will have time every day to absorb the information, free time to figure out how to put this into your practice, free time to figure out who are the clients you're going to contact when you get back, free time to be able to network and get tutored on how to do and implement cash flow. If you're interested, go to pivot2026.com and you can get information. It should be in the show notes. Thank you for tuning in to Cashflow Confidence Live. Remember, not all cash flow strategies are good permanent strategies. Your value as an advisor is helping clients distinguish between emergency rescues and sustainable wealth building and profitability. So download that ebook and you can start helping them this week. Until next time, be the confident cash flow advisor that your clients want.